Hello and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. Here on the show, we will discuss everything about the market and the current move you're looking at on the benchmark indices, on sectors and several of the stocks that are buzzing the most in trade. We'll get you expert views to find out how exactly should you be positioned in terms of the biggest movers and shakers on the stock markets. We'll focus especially on Tata Motors today to help you really understand the big news that came last night, and that was on the Tata Motors DVR, the company's decision to cancelling of the shares, and what does that really mean for shareholders. So stay on to that for that discussion too. But first up, a quick check on the markets. 19,800 back on the screen on the Nifty, 130 points of a sharp up move, days high currently on the Sensex as well, 0.7% of a move on the upside, 66,838 currently for the Sensex. It's up by almost 500 points right here. Let's look at the broader markets and see if the momentum is continuing on that front as well, and how are the mid-cap 100 and the small-cap 100 indices really trading. Small caps definitely, at about 0.34% uptick right now at 11,598 currently. Let's also look at the mid-cap 100 index and see if you're looking at a similar trajectory right there. About 0.5% of gains coming in. It's inching towards the day's high again. In terms of the sectoral indices, all the sectors are now up into the green, barring just flat move on the consumer healthcare business. You can see PSU banks really rallying and leading the sectoral indices from the front. 1% uptick for this one, 0.5% gains coming in on the metal pack as well. The IT names are also 0.5% higher. FMCG is almost 1% uptick in trade today. Autos flat to positive, financials flat to positive, healthcare, realty is 0.5% higher in trade as well. So these are the kind of momentum that you're looking at as far as the index movers are concerned. Let's look at the top Nifty 50 gainers. L&T tops the charts after the results, 4.2% uptick for this one. Reliance Industries is also higher by 2%. That's providing some weight to the markets and helping the markets inch higher, 25.36 currently for this one. ITC is again up 2% or so, 470 for this one. Adani Ports and UPL are the other top gainers at this point. Let's welcome our guest on the show. Mr. Sunny Agarwal joins in. He's the DVP and Head of Fundamental Desk at SBI Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, your views on the markets. We're back into the green after 3 days of lackluster trade and disappointing moves on the street. But, ahead of the US Fed move, the markets are, inching higher. Your own thoughts of how are you looking at the current setup, and what would you advise investors to do in this current trading setup?
Yeah, good afternoon, Sakshi. Thanks for having me on the show. Basically, what I believe is that market at the current juncture is a stock-specific market, and it is nothing like some one particular sector is doing well, so all the stocks of that sector will start performing. It's a purely result-driven or stock-specific action we are seeing in the market. A case in point, Infosys not performing well. A stock has been punished. TCS doing in line with expectation, moving sideways. So there is stock-specific reaction which we are seeing in the market. And going forward again, since it's the earning heavy season, week, maybe over the next 8 to 10 days, we will see many large cap companies delivering the numbers. So we will continue to see the stock-specific action. Nothing negative as such. Today evening US Fed meeting outcome is due. So again, 25 basis point rate hike is already discounted by the street. Ultimately, everyone will be keenly watching the commentary of the US Fed governor. And I believe that with the inflation on the back burner, obviously the commentary will be dovish and not hawkish. That's the hope with which we are going approaching the market as of now.
Okay, understood that. Let's focus on some of the stocks that are buzzing the most. Let's talk about Tata Motors and Tata Motors DVR now. That's in focus because 6 months after delisting the American depository receipts, Tata Motors has now decided to cancel the differential voting rights or the DVR shares as well, and get the shares delisted from the exchanges. This decision comes after 15 years of the issuance of the DVR as well. What's also interesting to know is that Tata Motors is the only large listed corporate to have such an instrument as well. So we will discuss this from basics to advanced. Let's first help all our viewers really come to terms with understanding what exactly are Tata Motors DVR shares. How are they different from Tata Motors shares that are listed on the exchanges?
If I remember, Tata Motors DVR share were issued in the year 2008, wherein the DVR shares, the voting rights in the DVR shares are slightly lower as compared to the normal ordinary share. But at the same time, they are compensated by higher dividend. So 5% was a higher dividend when the this instrument was issued by the Tata Motors. But I remember post this issuance, the SEBI came out with some regulation, change in regulation, which led to so there was no much follow-up issuance of instrument from other large corporates on this DVR. And when this instrument was issued, it was issued at a 10% discount to the prevailing market price of Tata Motor at that point of time. And post that, what we have seen is that the discount between Tata Motors DVR and Tata Motors has gradually increased, and it has been in the range of 40 to 50% over the last 5 to 10 years. And that is one of the reason I believe that Tata Motors is going ahead with the capital restructuring, so that there is a fair value discovery of Tata Motors as a ordinary share. At the same time, because of this restructuring, we will see share capital getting reduced to the extent of 4 to 5%. That will again be an EPS accretive for the Tata Motors shareholder. So overall, it's a win-win situation for Tata Motors DVR shareholder in the current scenario, as well as Tata Motors shareholder. And I believe that maybe this step is a precursor to the a possible demerger of some of its businesses, maybe 2 years down the line. So once the capital structure is made easy from a complex as of now, then that can help the company to demerge various businesses, maybe 2 year down the line. So there is no official announcement from Tata Motor as such, but that is
Yeah.
what I get a precursor that post this simplification of capital structure, Tata Motors may go ahead with a demerger of few of the businesses 2 years down the line.
Okay, so Tata Motors DVR shares really gained 18% intraday today as a reaction to the news. 52-week high levels for this one. Again, Tata Motors also has been looking up as well. Sharp move on this one. I wanted to understand what will the conversion of DVR shares to Tata Motors shares really mean, and what should investors really do now in terms of the shareholders of Tata Motors and the shareholders of Tata Motors DVR? For both of them, what would you advise?
What I believe is that the arbitrage opportunity which was available yesterday is not present as of now. So, if I remember yesterday based on the yesterday closing price, the arbitrage opportunity was for 23%. But we have to keep in mind that this transaction will take 12 to 15 month to consume it. At the same time, since these shares will be issued in the form of deemed dividend, there is an angle of tax also to attach to this transaction. So hence, despite of 23% clear theoretical arbitrage that was available yesterday evening post the closing of market, the stock has reacted only to the tune of 14%. And this is taking into account the implication of tax. At the same time, the opportunity cost for 12 to 15 months during which this transaction will be consummated. Now, going forward, what I believe is that both the stock prices of Tata Motors DVR as well as Tata Motor will move in tandem with the existing swap ratio. So the swap ratio is 10 share of Tata Motors DVR will get a 7 shares of Tata Motors, which is an ordinary share. So that's the swap ratio, and I believe that going forward the stock will continue to move in the same uh, swap ratio, and it will move in tandem. So there is no arbitrage opportunity much more left in the Tata Motors DVR and Tata Motors.
Okay, let's look at the brokerage house reports that have come out after the earnings on Tata Motors, and I will then take your view on the earnings as well. Morgan Stanley on Tata Motors has maintained an overweight rating on the company, target price of 711. CLSA has given a buy rating with the target price of 780. Jeffries has given the most bullish target on Tata Motors of 800 rupees per share. It has maintained a buy rating on the company as well. I wanted to understand, of course, after the earnings, what have you garnered from the results, from the fine print? We've already seen Tata Motors is the best Nifty performer as a share on a year-to-date basis, rallying very, very sharply, 62% odd. After these numbers, from these current levels of 647, how much more upside do you see? And at these levels also, would you advise a buy?
Yeah, definitely. So all the positive news has already been discounted by the Tata Motors share, and the currently price is ruling close to 650 rupees. But coming back to the results, so definitely JLR is one of the business which is kicking well for the Tata Motors. So volume of 93,000 unit, a strong order book of 1,85,000 unit, with out of that 76% is by Range Rover Sports and Defender, which is again a high margin, high realization product. So the outlook for Tata for a JLR is pretty robust for financial year 24. So quarter two again, the company is expecting the same volume delivery of 93,000 units, which implies that second half of FY24 will be very robust in terms of volume for JLR as a business. At the same time, there are other businesses like commercial vehicle. It continued to do well, although the company has lost the market share. But in terms of volume, the company has delivered fantastic on that front. At the same time, margins have also expanded on commercial vehicle business. Now, coming to the third piece, which is a passenger vehicle. Now, I would again like to split that business into two parts. One is IC engine and one is EV. So, IC engine business, which is a passenger vehicle, continues to do well in terms of volume growth. There are a few more product launches which are due in second half of FY24, and that will again add a kicker in terms of volume growth for passenger vehicle India business. EV business continue to do on well on volume front, but we have seen losses on EV business in the first quarter. The reason being that Tata Motors was one of the EV business was one of the sponsor for IPL tournament, which has recently concluded. At the same time, the battery cell prices, which were at a significantly higher level, the Tata Motors has guided that prices have started to come off, and the benefit of that will be seen in the over the next 2 to 3 quarters in the electric vehicle business. So all the engines firing for Tata Motors. In fact, the street is surprised that despite of such a healthy margin in JLR business, 8.6% EBIT margin, the company has not revised its full year guidance of margin for
Hmm.
JLR business. So maybe post second quarter we may see an upward revision in terms of margin for JLR.
Okay, understood that. So that's as far as both Tata Motors and Tata Motors DVR and outlook on both is concerned after the major decision and the earnings yesterday. Moving on, could you share with us which is the most bullish space in the markets according to you right now? Where are you most positive on? Any particular sectors or stocks that you'd like to highlight?
So again, I would not like to go sector specific, but again, so I have got a few picks which I feel
Sure.
can deliver a healthy return over the next 6 to 12 months. So starting with banking, HDFC Bank, obviously a robust set of number. IndusInd Bank, pretty good headroom in terms of valuation as well as in terms of earning growth. In terms of auto, I feel Ashok Leyland has delivered a robust set of numbers, guiding for a margin expansion from recent 10-11% to 15% over next 2 3 years. So Ashok Leyland is one of the business which we like. Coming to a renewable space, the recent development of REC and PFC being one of the nodal agencies to fund the renewable businesses across the sector and subsector. So I feel REC PFC can be a good bet in medium to long term. Railway story is playing out well. So recently we have seen Titagarh Wagon reporting a very solid set of numbers. At the
Hmm.
same time, there is a global tender of for wagon of 60,000 unit, which is likely to be due in next 2 3 months. So Jupiter Wagon is one of the company which we like in this space. Indus Tower again a play on funding on Vodafone fundraising program. So in case Vodafone is able to manage to raise the equity, the dues which are from the which need to be recovered from Vodafone by Indus Tower, that can be that is possible, and hence we feel that Indus Tower can be a good pick from here on.
Okay, understood that. Well, thank you so much, Mr. Agarwal, for being with us on the show and discussing all these insights about the markets and several stocks that you've discussed with us on the show. Pleasure having you with us on Business Today TV. Let's get back to
Thank
markets
you.
now and see how the markets are doing at this point. The Sensex up by 437 odd points. Healthy gains coming in on both the benchmark indices. The Nifty just close to that 19,800 mark right now, still holding up above 0.5% higher in trade. We'll continue to watch out for as to how the markets progress from here and how the second half of trading session really pans out. Remember, this will be just ahead of the FNO expiry tomorrow. So we are looking at, what kind of expiry will we be doing at this point in time, and we'll get you expert views on all of that as well as to how should you be trading before the expiry of the Series 2. So stay tuned on to Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.
Stunning. This EV with us on Tech Today, and of course, the location. This is the Audi Q8 e-tron SUV, an exclusive first look on Tech Today. We brought you out to the rugged outdoors because we thought this was an SUV which needs to be put through its paces. But while I'm also shooting, when the team takes a break, I've been thinking of updating my Instagram profile. And of course, I write Tech Geek,